My take: Moody's downgrade. What does it mean for us, the people? Today, we are diving into a major financial headline. Moody's, one of the top global credit rating agencies, has downgraded the credit rating of the United States government. What does that actually mean? And why should we care? Let's break it down into 5 sections clearly and simply. Section 1: What happened? Moody's has lowered the US long term credit rating from AAA to AA1. This means that, in their view, the US is no longer the world's most trustworthy borrower. It's worth noting this is the last of the three major credit agencies to issue a downgrade. Standard and Poor did it in 2011, Fitch followed in 2023, and now Moody's has joined them. Section 2: Why did it happen? The downgrade wasn't random. Moody's listed three big concerns. First, persistently rising federal deficits. The US is spending more than it earns year after year. Second, political dysfunction. Ongoing fights over the debt ceiling and the threat of government shutdowns undermine confidence in fiscal governance. And three, the cost of debt is rising fast. With higher interest rates, the government is paying more just to service its existing debt. Section 3: Why it matters. So, what are the consequences of this downgrade? Number one, the US may face higher borrowing costs. Investors could demand higher interest on government bonds. Number two, there is potential for market turbulence. A downgrade sends a signal to investors, and they often respond with caution or volatility. And number three, it chips away at the US's global financial reputation. For decades, US Treasury bonds were considered the safest investment on earth. That perception is being challenged today. Section 4: Global Ripple Effects. Remember, US Treasuries are the benchmark for global finance. If their safety is questioned, it can cause global interest rates to shift, investors' behavior to change, and even impact currency markets, especially the US dollar. Section 5: What's next? So, what happens now? Moody's is watching closely. If the US doesn't take steps to improve its financial outlook, more action could follow. That means addressing both sides of the equation: revenue and spending, taxes and entitlements, debt and discipline. The challenge is as much political as it is financial. In summary, Moody's downgrade of the US government is not just a technical adjustment, it is a wake up call. It reminds us that no economy, not even the world's largest, is immune to financial mismanagement or political instability. Let us hope Washington listens.